last year you had a parallel white curve drawn in your Bitcoin chart, which I remember correctly marked the top. Could you show us this please again, if you have it, for the bottom? So I think it's the chart for BLX. The issue with that chart is, so this is actually not parallel. Those are just two curved lines that, interestingly enough, connected the tops and the bottoms relatively well. The issue with BLX is it doesn't update anymore. So for whatever reason, this index has stopped updating in August of last year. But yeah, the tops align pretty well. We did anticipate the sell-off in October of last year. By the way, what I recommend you to do, in case you've never done this, have a look at other crypto YouTubers, the crypto YouTubers you currently follow, and check what did they actually say in October of last year. Were they bullish or were they bearish? And then have a look at the same kind of content over here on this channel, of course, and then compare, and then check whether or not you want to follow a certain influencer still. Have the same look also for other, I think it's always the turnaround points that are interesting, right? So let's say the bear market bottom, where your favorite influencers bullish or bearish at the time. So just check out the videos at the time of various people and see whether it makes sense to follow. But yeah, this is, I think, an interesting chart. We can draw something similar for Bitcoin. I'm not sure if we have. Let's see if I've got a curved line here. No, I do not. But we can, of course, just do this together right now. So we have our curved line. The problem, unfortunately, with the Bitcoin chart, even though it's more recent, right, it's still updating. The problem with the chart is I don't have as much of the very early data. So this data only starts at the at Q3 2011, but still it's probably good enough. Let's figure out where those bottoms align relatively well. Let's include the COVID crash. Let's include the early data. It's almost a miracle, right? How those, with just a curved line, how those bottoms and how those tops align pretty well. So I think this is pretty good. All right, so we have almost everything in here. I think this is best. Now we've got COVID in here. We've got everything quite nicely aligned. If we just take that potential bottom, then if we were to crash tomorrow, we'd fall to $52,000. So that would be the potential bear market bottom according to this chart here. Now, this might not be perfect, right? Because we have seen adjustments to similar approaches in the past. There is the Bitcoin rainbow chart. They got adjusted every now and then. There are all kinds of logarithmic regressions that have changed. So here, let me show you what I mean. This here is the Bitcoin rainbow price chart. In the early days, we didn't have this purple area over here that was just added after the bear market was more severe than people anticipated. Also, we see how this particular chart overestimates the cycle top in 2021. So many people were actually waiting for at least 100K in Bitcoin and were not able to sell the top at 70K. So approaches like this, they are nice entertainment. They can work to a degree, but I would not be surprised at all if we actually were to fall below the 52K. There are other approaches like the 200-day moving average, right? So the 50-week moving average. If we take the 50-week SMA. Let's just add a moving average, simple moving average. We are now on a weekly chart. We add 4 years, I believe it was mainly. Yeah, the 200-week moving average. That's the one that we want to look at. The 4-year moving average, basically. It used to be a very nice bottom indicator. So just have a look at this, right? We bottomed out after the ICO crash over here. We also bottomed out quite nicely, just shortly fell below it during COVID. And then came the big surprise after FTX and Terra Luna. Suddenly, what used to be a really, really nice bottom indicator stopped being a good bottom indicator. And we went below that for several months by quite a bit, right? So by 33%. So models that used to work don't necessarily have to work in the future. And in the early days, people said that Bitcoin is very unlikely going to fall below the 4-year moving average. And the reasoning behind this was that Bitcoin halves every 4 years, right? So the newly issued supply of Bitcoin gets cut in half every 4 years. And because of that, there's the 4-year cycle. And because of that, we get a rally every 4 years. And because of that, we should also stay above the 4-year moving average all the time. That was the reasoning why we should always be above that moving average. And that's why many people at the time here thought that we'd bounce very quickly from the 22K. But we didn't bounce at the 22K. We went down all the way to 16K. And so this is then the big question, right? If you rely too much on a single model, then you might not continue to buy at those levels, and you might give up, and you might think that whatever worked in the past doesn't work in the future anymore. And so then you're missing out on the very best bull market that subsequently followed, right? If you continued buying, you had the chance of making, just in Bitcoin, more than a 7x. So that's why we have to be a bit cautious, and that's why just drawing a line like this might not necessarily give us the absolute bear market bottom. By the way, this 200-week moving average is currently at $58,000, and we bounced off that with the crash recently.